10/13/2012, 10:57 a.m. Pacific Standard Time. Today is a very special day because once again we are going to cover the IBM fourth quarterly earnings, and we are. IBM weekly chart, we would like to say that IBM got up to an overbought area going into the quarterly earnings. The quarterly earnings are going to be after the closing bell. Right here, IBM reports Tuesday after the close. The date, October 16th. Today's date, October 13th. IBM is one model that executes quarterly after quarterly after quarterly. What we're going to be taking a look at is where IBM may have some challenges in the quarter. And what are they doing in the enterprise market and various different pricing controls that they use? And where are the sales at this lower growth environment? How has Big Blue outperformed the broader market? It has, to all-time calendar 52-week highs right here, the prior week. Now, I'm going to show the weekly chart, MMT. The highs were 211.79. And we had the reversal on IBM from that level to this weekly low of 205.05, which is where that last 2-week breakout was at major support level and where the major downtrend started back over here on 4/29, April 29th of 2012, and it's sitting right there where this gap down was. And every time that at certain times when we rally up, it's time to short Big Blue, and Big Blue can have great reversals in it, and we're going into the quarterly earnings. IBM closed up $2 on Friday, 2.7 million shares, $127 million money flow, had 100 highs and 2 lows. And the high was 207.96, and the low was that calendar weekly reversal low with the broader markets. And what can it do? Where does IBM have the real support level? Well, there's going to be a support level down here, okay. But when the earnings come out, and if they miss the quarter, we will pop back down, and we're going to look to see if IBM could come right here where this low was. This high was 202, but the low was 197 here, which is about $10 down. And this is where we're going to be looking at during the quarterly, is where this gap down potentially could come. But most importantly is that I have over here, we're going to be taking a look at the 195 call that's in the money, the 195 put that's out of the money, the $200 put that's out of the money, $200 call, 205 put, 210 call, and 210 put that is slightly in the money. And every one of them have a relationship. Now, having said where the weekly chart is, I'm going to show where that Big Blue daily chart, it's below the 10 and the 20, and people will look at it. Here's your 50-day moving average down here. On a daily, that 50-day moving average is at 202.28, $202. So we're going to see that on this daily support line. I just wanted to show that part of it. Now, when the earnings come, and if they guide the quarter down because things are slower and they don't meet it, it would be one of the first quarters, just like Nike and FedEx and lots of other big bellwether companies have had to guide down to meet the lower growth environment in the U.S. economy and the worldwide markets. But we know that Big Blue executes all around the world. And governments use their software. They do lots of things. It's been a great trade. I will tell you, though, that 50-day simple moving average would come into play. The 100-day moving average is at 197.5. The 40-day moving average is at 203, but we're looking for a gap down volatility or a gap up. How do we take out the high on the earnings? But it's going to trade tomorrow, not tomorrow on Sunday, but Monday it's going to trade, and then it'll trade a certain way Tuesday, and then it'll go right into the reporting. And believe me, Big Blue can move the market. It got daily support here. Here's another support level right down here. The top of that bar, once again, is 203.21. But the 200-day moving average and the 100-day moving average, the 200-day moving average is down here at 197 on a daily. Now, we do know that Apple broke its 50-day moving average and sold down hard. When you take a look at the S&P 500 relative to Big Blue right here, S&P 500 is sitting on its 50-day moving average. And the S&P is sold down to the 50-day moving average. IBM, on the other hand, has not tested from its bull phase like it loves to do. Let's not be fooled that IBM doesn't like to have great reversals. We've gotten a lot of these down here. And at times you can get headwinds, but at times you get the great bull moves to the all-time highs from these summer rallies. We're out of the summer rally period. IBM will deal with the quarterly earnings. One of the things that I'll feature is this is that IBM daily chart, and I can tell you down here would be a great place at the 50-day simple. If we break it and sell down here, we'll be looking at entries to buy during this earnings. But one of the things that we're going to cover right now is we're going to take a look here at the $200 put below the market. Yes, IBM closed up $7. However, we're going to take a look at this deflated price so that when we go to trade it, we can be involved in IBM and have some puts in case they don't make the quarter, but we want to buy these as cheap as we can get them. And if we can pick these up at 70 cents, 60 cents, we could be involved. So if IBM trades up going into the earnings, continues its move up, this $200 put will come back down to this area, and we'll try to get some of these at the low price. And then what we would be taking a look at is how we get that cheap price there. But when you take a look at the call side over here, this is a $210 call that was inflated up here, and it's pulled back within that weekly reversal on IBM. These calls are inflated at 481. They've given their values up, and they hit the lows down here, but these calls can go a lot lower. So if IBM was to sell down, we would be wanting to make the transaction here up and out of the money for a good earnings at the lowest price level in the $210 call. The $205 put option that I'll show over here, if IBM continues to go higher, we can look at this $205 put that's at its all-time lows going into the earnings. And that you can see they were $3.52, but they were down here at $1. Now, if IBM trades up, we would go buy the calls and let IBM go higher and sell the calls, but we want these puts below the market at the cheapest value. And you can see that relative to the $210 call, you can see the $205 put here, both on call and put charts that the public doesn't know how to use very well. They don't even use them, really. You have to, because you got to know that these were inflated up here, and a good report, that's the upside, but we want to get them cheaper. We want to get them down here, $1.30, $1.25, and that the put side would go up in value. If this is going to come down in value, then this side has to go up. But we'll find out what IBM trades like on Monday, and we'll trade it Monday and Tuesday going into the report. But we'll have this again on IBM. We're going to have the 210 call, and we're going to have a look here at the 205 put. And once again, we're going to do the in the money call. If IBM gaps down, you see the $200 call that got way up here at $12 and it got down here. After they report, and if they gap down and the puts go up, we would look at trying to buy these on a gap down, on an earnings gap down. If they took all the premium out and Big Blue missed its earnings and Big Blue trades down toward $200, that means that this Big Blue $200 call is going to come way down here, and that's another one of our trading scenarios on IBM earnings. There are lots of scenarios that we will be trading, and it will be on both sides of the marketplace, and it will be a Tuesday IBM, and it will be using the various call and put strategies to trade that earnings report the day after and the day that it does report and the morning after, on how to steal the calls and the puts based on IBM's report. Let it be known, Bellwether IBM. Daily chart, weekly chart, call chart, put charts, everything that it takes to make a decision.